Friday's market closes, well, mostly higher over in the grain trade, except for a few soybean contracts, kind of mixed over in cattle and lower in hogs. Joining us with analysis, Matt Bennett with agmarket.net. Well, a lower weekly close in the grains here as we round out the week, Matt. And in the grains, talk about some of the uncertainty that pushed us lower this week, and does that carry over into next week?
I think the thing is you started the week out with really good rains in part of the western corn belt that had been driest. Parts of Iowa, parts of Nebraska that had really been begging for a rain finally had a system come through and give them some rain. I understand some of those folks, you see on Twitter, and maybe it was a little disappointing compared to what the radar looked like. Other areas, I saw people dumping 2.5, 3 inches out. So, bottom line is, when you get that kind of rain to start the week, you're facing an uphill battle, especially when the previous week you actually had strong gains for both corn and beans in the face of the August report. August report wasn't bullish, but we still closed the week in good fashion. And so I think the market was ripe for some sort of a correction, but at the same time, we're far from knowing what these crops are going to make at this time. My personal thought process is that the USDA, came out with a fairly aggressive soybean yield estimate. 175.4 on corn actually seemed like a fair number. Right now, I'm probably 175, so I'm not too far from them. But I do think 51.9 was a bit rich for my blood.
So if the market is still trying to determine crop size, and it sounds like you are too, what are we going to be watching in the Pro Farmer Crop Tour as we go through the week to maybe give us a few hints of where this yield is going?
Yeah, absolutely. And so there's no question that you hear a lot of tip back talk when it comes to corn. So I'm going to be watching very closely and see just how significant that was. Of course, we had a ton of heat at different times this year. For one thing in June, for one thing in July. And in June, we were trying to set the ear size on some of this corn. So there's no question we're going to be watching ear size, ear counts, and then we're going to see, hey, did pollination go without a hitch for most of these folks? I don't think that's the case. And so it was definitely a year of extremes. I think you're going to have some serious haves and some serious have-nots. It's my opinion that the tour might find some of the highest yield estimates, if not the highest, that they've ever seen in some fields, whereas I do think you're going to have some 2012 type yields, unfortunately, on some of those stops as well. And so trying to get that all put together and figure out just where we're going to lie, that's a tall task. But I think that this year, as much as any year I can remember, I feel like this Pro Farmer Tour is going to be watched very closely just because of all the disparities. And once again, because USDA doesn't get in the field in August.
So does the East make up for the West? And I agree with you, these field surveys are really important.
That's a really good question. And again, I keep telling people, remember, parts of Ohio had a really rough start, awfully wet, had a really tough time to be able to get going, and then turned off a little bit hot and dry, after they got going. And so parts of Indiana the same way. And so the interesting thing is there's some really intense pockets. If you look at the National Drought Monitor, and there's actually places in Illinois, everyone thinks Illinois is just a garden spot across the board, and that's just quite frankly not the case. You get up around Champaign going east towards into Indiana, it's really dry in some of those areas. Some of those folks have really not been dealt a very good hand, whereas you go 30, 40 miles south of there, and yeah, it's a garden spot in some of those places. So it's going to be very interesting, but the tour will go right through there. They go right down Interstate 74, and there's no question they're going to see some things, in my opinion, that they don't typically see around an area like Champaign, Bloomington areas.
So do you think it was easier for the market to go down this week just because we don't have the funds as long as they were, prior this year?
Yeah, it's not only that, but it's a hard time of year to get a rally.
Seasonally,
You're
yeah.
fighting some seasonals, and you're going in towards harvest. Of course, the commercials know that they've got a captive supply that's coming their way. You've seen basis weaken in most areas. You saw the ethanol numbers kind of back off. People say, well, why are they backing off? Well, I'm not sure every ethanol plant wants to go chase corn with a $2 over basis. And so, a lot of these folks have kind of backed off a shade. But at the same time, you got to ask yourself, right now for new crop, you're a sub 1.4 carry. You really don't have the room to shave a whole lot more yield off.
Right.
And the USDA has been fairly aggressive in cutting demand. So, you could probably maybe shave exports a little more, but feed and residual usage has come down quite a bit, down to, I think, 2.375. I don't know that there's going to be a whole lot more room there, even though cattle numbers are going to be a little bit lower.
Got to ask you though, corn and soybeans, especially corn, has been sideways pretty much on a chart since June. What does it take to pop us out either side of that?
That's a great question. And so my personal thought is getting some combines rolling and getting some numbers in September. I think you could start to finally put the pieces to the puzzle together. You know, if, let's say, for instance, China would step in and buy a bunch of corn, there's no question in my mind it would make a huge difference, because a lot of the thought process right now is that they're going to be looking towards Brazil as much as anything for most of their needs. Those things could certainly cause an impact. But as far as towards the downside, what if we get into this crop and we find that, hey, you know what, it's actually a lot better than what we thought. Yeah, there's some tip back that this stuff's weighing like lead. I mean, we can't dispute the fact that this last week or so, we've been blessed with much cooler weather. Grain fill weather has actually been ideal over the last week to 10 days. And so if this continues, and I've got to think that test weights could certainly be improved, some of this corn could weigh like lead. So, you know, there's still a lot of unknowns out here, but to break out of the range, you're going to have to get some hard data that this production number is going to vary to any great degree from what the USDA is currently forecasting.
It would also help if wheat quit going down, I'm sure. So let's talk
Absolutely.
about the cattle market. Again, front end of the board, we still haven't taken out the contract highs. We had a higher week, though, in futures, a higher week in cash. What's it going to take to get to those contract highs in that front month?
Yeah, I mean, as we talk, I haven't seen the cattle on feed numbers. You know, the thing is, for me, we all expected that they would be a little more of a friendly nature and that placements would continue to go lower. There's no doubt that we've seen some liquidation in the cattle industry. Some cattle have gone to slaughter earlier than what we prefer. Obviously, the drought in the areas of the Midwest that you see drought, those are the areas that's got the most cattle. I mean, you know, I know that doesn't sound scientific, but just look and see where the drought monitor is, and that's where the cattle are. It's made a very tough situation on the cattle producer. And so I've got to think placements will continue to move a little bit lower. As long as we see consumer confidence stay strong and the equities markets don't fall apart, I think that fat cattle could be quite good property as you move into the first and second quarter this next year, because I do believe your numbers are going to continue to dwindle.
October hogs down $7 for the week, despite a premium that's like $27 or more. You know, why are we seeing that?
A little bit overcooked, I think, on the hogs. I mean, the thing is that, you know, we'd been running that. August was 120, 122 as it went off the board. A lot of folks said, well, I wonder if we're going to be able to rally October on up and, you know, kind of meet up with where that front month was as it went off the board. And it just doesn't seem like that's the case. And so I don't believe that the buying interest is there right now. I think people look at, you know, if you're looking at hogs or you're looking at cattle, people are a lot more excited about owning cattle at this point. Hogs are, I think people have lost a little bit of interest there.
Okay, thanks so much. Matt Bennett with agmarket.net.